Ladies and gentlemen, boys and girls, we are back. I got my voice back. It has been an incredibly rough day. Everyone's sick in the middle of an ice storm, but we're going to break down everything today. So we got the futures like we normally do, kind of a midweek recap. We have then a couple of earnings plays we're going to go over, including Ford, Qualcomm, ARM. I want to talk about my TEM position that just is unstoppable. First and foremost, let's go over the dollar. So we rejected this weekly zone. Kind of a quick little hiccup here at this 4-hour zone, really. Ultimately, I got to stick to the charts. I would be looking for a higher low, but that does kind of have that arching look where we're clearly losing momentum. If we were to bounce here, that is a lower high and a higher low. And I think there's, I don't want to say a lot of confusion, but there's a couple ways this we can go about this as far as the dollar goes. There are strategies for us that that Trump might try to go after. For instance, there are weaker dollar strategies versus stronger dollar strategies. So that'll lead probably more in the macroeconomics of things to come. For now, I think I got to stay. I hate saying I'm long the dollar. For now, I would be looking for a higher low for now, at least even to pop up and maybe hit this zone again. That's what I'm keeping an eye on. But having the dollar up here is what I think is problematic, which is why I was so crazy and went short a while back, or went so heavy short as far as the U.S. dollar, Japanese yen. Now, ultimately, we did reject. Now, I am short. Hopefully, we're breaking out of this monthly zone, and this can come down. But if I'm playing any smaller time frames, we could probably zone this out right here, as a matter of fact. So looking at this area, right, even back here, all over to here, we probably bounce on the type 1. If I were to try to go long, my stop would be 151,180. Bitcoin really just kind of hanging out. So we played the back and forth game between these two yellow zones. Let's see. Right now it's trying to hold this zone right here. Ultimately, that's what's going to be more important. Breaking that 96 level, we're probably going to hop on down to 92 for a bigger horizontal range. Ooh, yeah, it's a zone until not. You know, you've heard me say that before. As it looks like we're kind of headed down there. S&P moving and grooving. Now this was, as far as this range, right, this was the Sunday before this last Sunday, and we gapped down, we sent it. This last Sunday, gapped down all the way, but we bounced. That's why I have this range kind of here highlighted. I'll delete this now so we can go over that just later. There we go. Right now, I'm in SPY calls. I do think we're going to hit this yellow zone. All eyes are on this yellow zone. I don't know if I will go short here. I want to say I just might take a short position. For sure, I do think we're going to hit all-time highs one more time. So I'm kind of thinking we get up here, but I just get nervous in this range. It looks like to me somebody's de-risking. A bigger institution is closing out their positions, and they're doing it, and then they're just dropping this thing, right? Let the dip buy crowd show up, and they didn't get the memo yet, and then they just drop some more again. So I'm curious what's really going on here. Who knows something we don't, which is making me a little bit edgy as far as, like, should I just get into my short position now? I've been waiting for things to turn around first, and then I'll go short. I still think we're going to crash in March, start to crash, and by crash, crash is 20% or more, but I'm thinking at least a high teens correction if we don't actually officially get the crash. So I'm watching this area. Now, if I do go short, anything I do will be probably August timeframe as far as like puts or anything like that. Look at the expected move. Yeah, we're just right back in the middle. Now, the NASDAQ right here. See, I don't know if I want to grab SPXS or SQQQ. I'm looking at that as opposed to grabbing puts. Both of them will decay. Puts will decay probably a little bit faster depending on how you play it. One costs a little bit more. You pay for that, right, in capital. So if the NASDAQ were to get above here right at the same time the S&P is at those levels, I would probably go ahead and grab SQQQ. But at the same time, if things are crashing, tech might be the ones that save things as well. I know money, at least the bare minimum, will flood back into those, so is it safer to grab SPXS? But at the same time, if you look at a lot of the stocks in the S&P, they're all just down. So a lot of this all-time high stuff we're seeing is from some of the big tech giants. So I'm back and forth on there. I'll for sure let you guys know as far as which one that I do go. If you guys do want to check out the community, check on that Patreon link down below, because that's where I just post all the plays. You don't need to wait for a YouTube video. But for now, I'll be watching above this blue zone to take that. This is the 50 SMA. Not something I'm using, just a popular one to have up. Ultimately, right now, we're just very sideways. And that just being the top of the range. Nothing to be too bearish about just yet. As far as Grandpa Dow, he's moving and grooving. He's trucking. Looks like that's about to hit all-time highs just in general. We're just a stone throw, hop, jump, and a skip away from all-time highs. We could hit that tomorrow, no problem, and at least get those headlines. Right now, this actually does look pretty bullish compared to all of them. It was crazy because this one was incredibly bearish. While the others rebounded a lot faster, they've rebounded, started to show signs of weakness, where this one just now rebounding, kind of getting back up there and just shrugged that off. Looking at the Russell, this one I would potentially just be going short right now, just as a zone play, coming into that zone, looking for short opportunities there. Let's talk about TEM and how Pelosi just never loses. Right now, after hours, $70.85. Now, I bought this play, again, the week prior and prior to that, I had said, I think we're missing out on AI and medical space. I think there's going to be a big jump there. So I started to look around. Then Pelosi bought it. And that just, again, checked all the boxes for me. Right now, I do think, I don't want to confuse people. This could... It's not entirely a momentum play, but I think it's pushing up for the wrong reasons, if that makes sense. I think a lot of buyers are buying it because of Pelosi. And now it certainly checked one of the boxes for me, just because if it has to do with legislation or anything, she's in the know. We'll put it that way. So I didn't mind buying it, riding that momentum up, selling it. Maybe I'll get back in while I do the homework. So it's been an absolutely phenomenal play. If you were in my community, we bought it. We'd already sold. We'd locked in some profits. As far as my play goes, I bought 1,000 shares, and then I'd sold the 56 strike calls against those, just 5 of them. And even now, I was like, I'm going to let those go. I'm going to lighten the position. Even now, I rolled those to the 57s for next week. Now, I did collect money to do that, and then I'll probably continue to do so if I can. If not, I will let those go. But I got to say, up in this area, I don't know if I will, but man, it's going to be hard not to short it or maybe consider buying some puts up here. Now, again, not to confuse a longer-term play with a short-term play. Jumping up into this zone, that's just going to be a chart play in general. We're going to look for overhead supply. You're going to look for the sellers to show up. And it might not be a bad time to even go short. Very easy. If you get it short right here, your stop's going to be, they're all-time high, 79.85. Should be an easy one to do. So I'll keep you updated as far as that goes, but that's why I also haven't added back in yet. If it does pop down, I might consider buying the dip on that as well, or maybe even just closing out my covered calls. But this thing, so far, recession-proof. It has just avoided look at this chart compared to the market charts we've seen. This thing's absolutely killing it. Let's jump over to Ford. Now, Ford announced earnings today, so I'll pull up here on screen. So, Ford reported a fourth quarter net profit of $1.8 billion. Let me bring it up here for you guys. So, a significant improvement from a loss of $500 million the same period last year. And as far as their guidance go, they project the company projects adjusted pre-tax income for 2025 to be between $7 billion and $8.5 billion, which is down from $10.2 billion in 2024. But Ford's electric division reported a $5 billion loss for 2024 and anticipates the loss between $5 and $5.5 billion in 2025 due to ongoing investments. And now, if you guys have been watching for a little bit, I went short GM. So I'm still short GM. I haven't short Ford yet. What's GM doing? Yeah, break down. This is a short play. I'm holding it full send. Anyway, I think the automotive industry is going to get absolutely hammered. Now, GM is way up there. Ford is kind of already low. When Ford gets to the $8 mark, I kind of just like buying it. It's in everyone's 401. It's just a good blue-collar stock. It's been a while since I've even said that. Options are liquid. There's a lot of good things about this particular ticker. For now, it hasn't checked that box. If it gets down to that 850 mark, it'd be hard not to get back in. Again, guys, I sold all of my dividend stocks. I sold Ford. I sold everything to go all in on AI. Obviously, that was a fantastic move. But that being said, I can't ignore how easy this one is to actually trade and create an income off of. So a red earnings right now, it was kind of holding this zone right here, seeing that red get below. Even if the dip buy crowd shows up, just remember what a wick is. A wick is a sign of rejection or a sign of what's to come. So I would be cautious on buying the dip, or be cautious of the reasons for why you're maybe buying the dip on this one. Jumping into ARM right here. I'll get it up here. So ARM reported a fiscal third quarter revenue $983 million, which is a 19% increase year over year, surpassing analysts' expectations. Adjusted earnings per share 39 cents, beating the anticipated 34. Guidance for the current quarter, so ARM forecast revenue between $1.175 billion and $1.2 billion, aligning with the analyst estimates. The company adjusted its full year revenue outlook to a range of $3.94 to $4 billion. So they're doing all right, but numbers aside, it all sounded good. Sold off. For now, if there was one to buy the dip on, I could entertain this one, putting a stop at 153.85. So what are you, $7 worth a share? Yeah, this is what I would, for now, just for the current events, buy the dip. Charts haven't really turned around yet. This one could be a dip buy. Put your stop in. Once it bumps up, put your stop in the green. And then I would let this continue. But if the market does begin to crash, if things get weird, this is one I wouldn't want to hold during a crash. I want to be very specific because it's not that I don't like this company at all. There's just when the whole market crashes, there's just not there's sometimes there's not a place to hide. Everything goes down. Your favorite companies go down, and I let go of Tesla and Meta 30%. Now I sold calls to exit those positions, so I got paid to do so. But I lightened the load a little bit. I went really hard when Tesla was like 170, when Meta was at 90. And Meta right now is a $700 stock, so I could afford to lighten the load a little bit. But it does kind of suck watching everything go down, especially new positions. So, again, have a plan or plan to fail. There are tickers like AMD. AMD, I'm buying. Right now, we're going to cover some more earnings. This had a rough earnings. Fundamentals on this, I still think are good. I will buy more of this. And as it goes down, I'm just going to buy more. Now, that being said, that's all in the plan before I ever click the buy button. So when we talk about buying the dip and all that, that's trader talk. Buying the dip means nothing really to an investor. Because let's say if I think AMD is going to $800 a share, $900, $1,000, he's gonna call up Jensen and say, hey, what are we doing? I'm gonna follow your footsteps, and they just full send. Who really cares if I bought the dip at 110, if I paid 118 for it, or if I paid $94 for it? That's negligible compared to where it's going to go. So when I say buy the dip, I'm probably that's trader talk. Okay, jumping back into who else had earnings today, Qualcomm. So Qualcomm's first quarter earnings per share actually rose 24% to $341, exceeding the expectations of $296. Revenue increased 18% year over year with $11.6 billion, driven by a 20% rise in chip sales, particularly in, what they make most of, smartphones. So we're doing good. Ultimately, held that zone. So that sucks. The company forecasts a second quarter revenue between $10.3 and $11.2 billion, with an expected earnings per share of $2.80 at the midpoint, both surpassing analyst expectations. However, Qualcomm anticipates flat revenue from its patent license business. Maybe that's why we got such a red reaction. Very, very horizontal, and I can highlight this a little bit for you. I'll make it yellow. First color your brain actually recognizes. We're just kind of horizontal. We tried to get above. If there was going to be an excuse to get above this zone, it was earnings, but it just couldn't do it. Got above, almost that next zone, sold back off. Qualcomm, if I was going to entertain this one, I would probably wait for this bottom zone, maybe sell some 150 puts to enter. I would want to get paid to enter. This one I actually wouldn't mind even holding. It's we'll call it $170 a share. You got 85 cents a share dividend, looks like. Yeah, and pretty consistent dividend. Should be. It's a pretty popular dividend ticker. I should not be an aristocrat. But anyway, ladies and gentlemen, I'll wrap that up here. As far as anyone that I like, that I would, Ford, okay. Both Ford and Qualcomm, if they just get to the right levels, I would consider selling puts to get in. Everything else, just getting ready for what's coming. Let me know down below, what do you think? Do you think there's going to be a crash, a correction? What are your overall thoughts? Because I'm thinking March. We're in February. That March is going to be here sooner than you think. So what are you doing for what's coming? Anyway, let me know, and I will see you guys in the next video.